My total investment portfolio is currently just under £180,000. And of this, I have £120,000 pretty much bang on in my Vanguard account. So nearly 2/3 of all of my money invested is with Vanguard, and that's exactly what we're going to be going through in this video. But first, what is going on in the markets? Long story short, pretty much everything is up on the year. VUAG, the S&P 500, is up nearly 6%. EQQQ, the Nasdaq, is up nearly 10%. The global stock market through VWRP, the FTSE All World, is also up about 10%. Bitcoin is up 8%, so surprisingly not doing as well as these broad market-based index funds. Finally, the big winner though is really these precious metals. Gold and silver, as you can see on the right, is up 50+%. And that brings me here to my portfolio, which is nearly at £100,000, which is what we're going to be going through in this video. I'm going to be completely transparent and showing you everything as always, but really the key message of showing you all of those charts is simply stay invested. You do need to make some decisions, of course, in terms of what platforms to use, what actual investments to make. But once you've done that, assuming they're the best for you, just be consistent. Ignore all the noise. Most of it is irrelevant, if not all of it, and hold for the long term. I've got a cup of tea, ready to get stuck into this Vanguard investment portfolio update. And of course, if you want to, stop waiting and start investing. Give this a read. To be honest with you, I might just give this one away. So if anyone watching, leave a comment down below. Anything, what you invest into, why you want to start investing, say something down below and I'll give this away to someone before the release of the next video after this one. Even if you've got it, comment below. You can still maybe win it, give it to a brother, a cousin, early Christmas present, late birthday present, funeral present, probably not. But yeah, comment down below and you might win this. One other side point, recently done the Melbourne Marathon. Look at this bad boy. Bit of weight to this. Boom. Comment down below and you can also win. No, you're not winning that. My legs are still pretty dead, so I'm definitely keeping that one. So this is my Vanguard portfolio. It's at £92,329. This definitely has not happened overnight. I made my first contribution into my Vanguard UK account back in 2018. And as you can see, over the last 7 or so years, it's actually just over 7 years now. I started originally in August 2018 with this account. So 7 and a bit years later, I've made £23,000 of gains with a total value of 92,000. So the other 70 odd thousand pounds is my own contributions. Let's start with my ISA, which I no longer contribute to, and we're going to come on to why later, but this has £54,675, and of course, all of the money is in the FTSE Global All Cap. I've also got £1.66 of cash just sitting there, but yeah, 99.9% is in this one fund. I've covered this fund in a lot of detail on the channel and my Instagram, but long story short, it is simply the only index fund I need. The reason being is that it includes over 7,000 stocks for a low fee. I know there are lower fee global funds, but the reason why I still continue to use the FTSE Global All Cap, if we scroll down, is that it tracks large, medium and small size companies in developed and emerging markets. So it's one fund that does everything. I could use a separate fund like VWRP if I wanted to stick with Vanguard, or even ACWI, FWRG, different ETFs that track the global stock market for a lower fee, but they don't include small size companies. I could though do that and then also include a small cap ETF or fund on top of that. But to be honest with you, I just ultimately like the simplicity of a one global fund and done approach. I know the VWRP fees have been cut. I covered that in my last video. I did consider switching. Ultimately though, for now, I'm sticking with the FTSE Global All Cap. If you switch though, let me know down below. / what fund you actually invest into yourself. What's your main holding? Let me know down below and you'll be in a chance to win. Stop waiting, start investing. And that really is it. You can see I've contributed £35,000. It's returned £18,000 and I'm left with just under £55,000 in my stocks and shares ISA. The main benefit of this account is all the growth and dividends are completely tax-free. So if you are using a general investment account and you have an ISA allowance left, you'd be much better off using an ISA just because of those tax advantages. Quite funnily, to quickly touch on here, the general account, I originally opened that when I first started because I didn't know what an ISA was. I go through all that in the book and I've covered my investing mistakes in other videos, but that's why that's showing a £67 loss. So it's the one little faint, blip in the Vanguard UK portfolio. The second account I've got here is my SIPP, my pension pre-retirement, with £37,652 in. So with this account, I actually combined multiple old workplace pensions into this. So the gain is showing just over £4,000, but I actually had received over £8,000 of old gains in old workplace pensions, if that makes sense. A common question I always get is, if you move platforms or move investments, do you lose your compound interest? No, you don't, but it does mean when you switch over on the new account or new investment, in this case, because I consolidated an old workplace pension, it was a new account on a new platform and a new fund, my gains showed 0% again. However, my cost basis was higher, the initial amount I invested, because of those previous gains that I've got. So whilst optically the gains look a lot lower, which is why I wrote down that previous £8,000 of gains I had made, so mentally I know that's still there, you're actually investing more and your cost basis is higher because of those previous gains, so you don't lose that compound interest. Very common and good question that I regularly get. Other than this though, I have been making some transactions in this account. I've been moving money from my limited company into my SIPP as it's an allowable expense for the company. So you can see here, I've made a few contributions over the year. And that really is it. All of this money is also once again in the FTSE Global All Cap for the exact same reasons I've mentioned before. Some people might favor to have different investments in their ISA and SIPP. I personally, once again, keep it as simple as possible and just have the same. I'm not a financial advisor, of course. With investing, your capital is always at risk, but that's just what I do. I'm also not affiliated with Vanguard. I just like using their platform. And if you do have any questions on anything, once again, leave them in the comments and I'll be happy to help you out. Now, the SIPP hasn't been open as long, only since 2022 compared to my ISA, which was 2018. But you can see once again with those green dots where I've been investing over time. And down here, you can see on the 19th of February, that was the big one where I consolidated in a couple of old workplace pensions into this account just to simplify my approach. And that's where the £8,000 of gains are. So remember that. My gains are higher than this mentally. That's good to know. And to be honest with you, I'm pretty buzzing with this. It's nearly at 6 figures, which will be a massive milestone when I do get there. Now, let's get into my Vanguard Australia account. And this is why I don't currently use my ISA in the UK, because I'm in Australia. So I use my Vanguard Australia account instead. I'm at 57,000 dingo dollars just over, and in pounds, that is just under £28,000. So a decent sum of money that I've built up in my Vanguard Australia account. This is interestingly how the platform looks. And even though the Vanguard UK one is basic, this is even more basic and you can do even less in Vanguard Australia, which I'm not gonna lie is a downside, but as a low cost, long-term passive investor, it's also a good thing because you can't twinkle with it and fiddle around with it and mess something up. This is the total value and there's always a little bit of cash because on Vanguard Australia, just like the UK, you can only buy ETFs in full units. So there's always a bit of residual cash left over. I once again though only have one investment and it's one low cost global fund. This is a low cost global ETF called VGS. As you can see, I've got 374 units and it totals 57,000 dingo dollars. And unfortunately, you can't really see much more on the website than this. If I click into the fund, you'll then get a little bit of explanation saying it tracks the return of the MSCI World, which unfortunately is not as diversified as the FTSE Global All Cap, but this VGS fund was the most globally diversified fund that I could find on Vanguard Australia. It's also got a low fee of 0.18%, and that's essentially why I use it. You can see there's 1,300 companies, so whilst it is still globally diversified, it's much less diversified than the FTSE Global All Cap. It's more akin to the iShares MSCI World, which is a popular ETF that UK investors can invest into. You can see that over the last 5 years, it's performed well. It's up about 80%. And if I show you VWRP over the 5 years, it's relatively similar. So even though global funds do have nuances and differences, they're ultimately really driven by the same large companies. And in recent years, it's been the large US mega cap stocks. And that's why their returns are relatively the same. So whatever country you're in, whatever global fund you're deciding between, the best advice really, not that this is financial advice of course, is just to pick one you're happy with and just be consistent with it. There's no need to have multiple. You can if you want, but they'll all be similar. There's also no need to chop and change because that's just going to stress you out. Of course, if a new fund comes out that's much better, much lower fee, much more diversified, you can switch, but a lot of the current offering in the UK, for example, across the top global ETFs will all do something very similar and the returns will be similar. I actually uploaded an Instagram post on this recently comparing the 5 best global ETFs and their returns are pretty much identical over the years. And that wraps up my Vanguard portfolio update across all of my Vanguard accounts. In total, there's about £120,000 out of my £180,000 investment portfolio. And as you can see, my approach really is as simple as possible. A couple of global funds, one global fund in each account, invest what I can, be consistent, Don't try and time the market, ignore the noise, and hold for the long term. I hope this video helps. If you have any questions at all, I'm happy to help. Just let me know, and I'll see you in the next one.